Good morning, everybody. How are you doing? Thank you for being here on this wonderful Thursday morning. And special thank you to Chels, who confirmed what we all know, that I am not that smart. I set the stream up for 11:30 p.m. instead of a.m. this morning because clearly I don't know how to read. So thank you for texting me, letting me know about my blunder. And all's right in the world. It's at 11:30. We're here. Lena is here early. We have Rusty here. We got PB here. We got Diana here. Joni's here. Thank you, everybody, for all the support. Hollis is probably making another video about what I should say on my audition for Monopoly. Taiwan Semi absolutely crushed it. There is a bloodbath going on in the markets. People are being shook. And we got to get into all of it. We have more people saying that the Fed needs to hike rates, which we're going to get into. Fanatics Fest is going on this weekend. I will be there one of the days. Michael Rubin made some statements today, which is absolutely insane. And I can't believe it. We're going to get into it. And, it is what it is. You can't win everything. Got to be ready for a downturn. And before we get into anything, because today may be hot, Steve, we'll see. I put a red shirt on because my blood's probably going to boil when I go over some of it. I'm not a financial advisor. I'm not your financial advisor. Please do me a favor and read the disclaimer. And always remember, this is for educational and entertainment purposes only. And with that being said, let's go to the tape and let's see what's cooking underneath the hood. Milken, if you're still in the trade, you're doing all right. 44.30. Not what you want to see. Flight to safety on my watch list is happening. Realty income is up 2.88%. That monthly distribution is looking mighty juicy. Verizon is up. VC is up. Coca-Cola is up. The value is up. I mean, it's ugly out there. Salesforce getting a little bit of a video bid. We got Energy Transfer, Uber, QXO, 15.49. And then there was Apple. Apple's not shook. Apple's not scared of a good time. Apple's ready to rock and roll, fresh all-time highs when tech is getting killed. Microsoft's trying to get back to 400. Bitcoin is even up a little bit. Amazon, 255. Netflix, maybe they announce after dark today, after the market closes on their earnings. We will see. SpaceX, trying to bob and weave, stay above water. We'll see what happens. We'll see if they can. You got oil under 80. I'll take that. And then we get into the red. Meta, 676. That's quite okay. CrowdStrike at 205. Quite okay. Palantir, 132. SoFi, 1770. Now we're getting into the big losers. Taiwan Semi should be up so much right now. Same with NVIDIA. Zeta, 2179. Service Meow trying to fight to stay above 100. Qualcomm, 172. Qualcomm is getting back to my area where I want to get in. Broadcom down, 381. AMD hanging out over 500. Now, we get to the big ones. Hood, 111. Oracle, 126. Micron, 862. Keeps falling like a brick. CoreWeave, 73.43. IREN, 35.68. SanDisk, 14.67. Down 147 points. But then there were three. Nebius, Rocket Lab and ASTS. I'm just saying, you can't cry in the casino. And this is a normal market. To me, there is nothing to get worried about. But for a lot of people, they're hurting right now. And I'm going to say this, okay? If you are going to go out on a limb and invest in companies that are young companies, that are growth companies, okay? Please don't use leverage, because you know what happened? This is what I think is happening right now, okay? I honestly think people are getting margin called. I think people are getting stopped out of positions, and they're being forced to sell into weakness. Rocket Lab is down, 55% from its highs. ASTS is down a ton from its highs. Nebius was trying to get to 300. It's at 178. Look. Stocks don't go straight up. You have to be ready for that. I know that I can't get in and out, bob and weave with these companies. I don't even try to. I don't try to. I had no interest in these. And you know what? My own personal opinion is they keep coming down. Now, are they going to keep coming down? I have no idea. They could rebound tomorrow. But if you're in the S&P, you're having a good year. If you're in Apple, you're having a great day. So we'll see. I don't think this is something to get crazy about, but I do think there's a lot of people on leverage. And on a day when defensive stocks are running, I think people are taking the odds of a rate hike more seriously. And there's more people coming out saying that we need a hike. Now, Taiwan Semi should have saved the trade today. And I'm going to spend a lot of time on it, but I want to watch something before it goes off air with everybody. This is one stock. If it goes public, I am buying. Now, I am going to buy on principle. That may be one share if I don't like the numbers, but I want to be an owner of this company. If the numbers look good, I'm going to make a real investment in this company. And there's a reason why. They control the entire landscape. If there was ever a monopoly, Fanatics has a monopoly. And this is the wrong video. Rookie mistake. I clearly, once again, I told Charles in a text, I'm clearly not that smart. I can't even bring up a correct video. So I want to see what Ruben said. I'll get into why this is going to be so important and what's going on, and then we'll get into Taiwan Semi. We'll get into the trade. I actually asked somebody to come on a little bit to have a conversation with me. So it's going to be a good morning. Let's get into it.
Well, it's interesting that they even do an investor day because it's a private company, but what it's growing is the company's on track for $14 billion in revenue this year. Of that, about $7 billion is the commerce business. That was the original business, selling the jerseys and the merch. But Ruben has grown by a number of verticals into sports betting, into trading cards, and some other news I can share with you that I learned from the Investor Day is that Fanatics is planning to launch an all-in-one sports app for sports betting and for actually trading as well, which you can do on this app. So they're continuing to build the business, and he has really high ambitions, Carl, for the company as the preeminent sports platform. You know, now that they have dominated the merch business, there's international growth plans. He says it can be a much bigger business, as big of a $30 billion total addressable market on that business alone. And then, of course, the trading cards and the sports betting and the predictions markets, which they've gotten into as well. They're getting into an Amex credit card that gives, sports fans, Fanatics, cash basically to spend on this kind of, for sports fans, basically, to get the points from it. So they're in the content business as well with Fanatic Studios, which he looks at less as monetization play and more as a branding tool. And they're in, this events business too with Fanatics Fest.
Yeah,
it's growing.
It is a huge vertical all across Wall Street. We're working on it here at CNBC. huge companies like Goldman Sachs have entire teams working on sports valuation and investing opportunities.
Exactly. You just have to look at these team valuations, which continue to go through the roof, to see how valuable the sports economy has gotten. And so this is an interesting consumer company where there were all the retail analysts that we know were there. A lot of the bankers were there, just trying to learn about how they're, they are a company kind of at the forefront of this sports economy.
Where you look at the percentage of consumer spend relative to all kinds of other things we spend money on.
Yeah, I mean, especially incredible. This summer with World Cup, with, Knicks winning the championship, and they've now planted this flag with Fanatics. Apparently, because of Fanatics Fest, they have the Dodgers play the Yankees this weekend. Like, it's actually changed a lot in the sports calendar.
I look forward to watching Tom Brady throw a ball to you.
That was last year. We did that with the kids. But you should see the lineup they have this year, and a lot of it is, Ruben. He books it himself. He has this incredible network of athletes, and they're partners of his in the businesses, and it's like part of his whole flywheel. And he has, LeBron coming and FIFA players coming, and I think the entire Knicks team is coming, and people buy tickets for it.
Yeah, power broker for sure. Let's get a news update with Frank Collin. Hey, Frank.
Chris, what's going on?
What's up, Steve? How's it going, man?
Good. I want to show you something, but just give me 1 sec. So the reason why I'm so excited about Fanatics going public, Ruben has always said he wants to take it public. And if he goes public, I think that they're going to have a lot of trouble with the regulators with having a monopoly because they have all of the licenses. But to give everybody an idea of how big Fanatics Fest actually is, and I am going this weekend. So if you're going, let me know. It's across the entire Javits Center. They rent out the entire Javits Center again.
I may have to join you. Not at the thing. I just in Fanatics. Like my brother messaged me about Hasbro specifically because they own
Magic the
Wizards
Gathering.
of the Coast. Yeah. Sorry, interrupt. Go ahead.
Yeah. So floor 1, you have all the New York teams pretty much are going to be there. The Yankees do not have a setup, but a lot of the Yankees will be there today. It's probably because they're playing. You have a full card combine by AT&T, but here's where it gets crazy. Level 2, they did a full tailgate zone with all food trucks on level 2. And then they have a Fanatic zone with a bunch of games. Level 3 is crazy. Look at everybody who's going to be here. You have the WWE. You have the UFC, the NFL, MLB, American Express, Target, UPS. Fanatics is going to have a huge thing. The Knicks, the TikTok shop, ESPN's going to be there, Bleaker Trading. I mean, you talk about somebody that controls the hobby. This guy controls sports. He truly does. He has the licensing for all the jerseys, all the team wear, and all the cards. This is such a crazy business that I think people are sleeping on. And the fact that he's gotten this to 14 billion revenue, and it's to the point where he's actually hosting a trade night tomorrow night from 6 to 9 on the 4th floor. And then they have a separate site, which I don't even know what this is. I know they're doing a big thing for the World Cup, but I am super bullish Fanatics. And this is something a lot of people are talking about, Anthropic, OpenAI, which I get. Fanatics is a sleeper and they control the entire industry. So don't sleep on Fanatics. That was my spiel on Fanatics. What are you going to say about Hasbro and Wizards?
Yeah, no, I mean, my brother was talking because my brother's probably got like over 6 figures in Magic cards. Like I have to ask him which ones. I don't know which ones he has, but he loves like the game itself. Like I've played with him a couple of times. Like, do you know the app for Magic the Gathering? I played it like on my iPad for like a good year or two. But it's hard to keep up with all the new packs when they come out and stuff. But it's a fun game. Like I really like the game itself.
It's intellectual.
So, yes.
You actually have to be somewhat smart to play. Like you can't.
Yeah.
It's funny. I wrote an article about Hasbro a while ago because it was down the dumps, and I went through the numbers, and I was like, "This is dumb." And I said the dividend yield was approaching 5%. The investment made sense. It's up. Are you ready for how much? And then we'll go into what I want to show you. Are you ready for how much Wizards of the Coast is of Hasbro's revenue?
No.
So they are pretty much all of their operating profit and most of their revenue. They're the lion's share of the revenue in Q1.
Wow. Yeah.
And then when you get to operating profit, it's really the only thing keeping this company afloat. I mean, you got 20 million in Q1 outside of it. They did almost $300 million in 1 quarter in operating profit.
Yeah. No, I mean,
crazy.
it's crazy. But I think what's also very interesting is that there's a giant collector's market that sort of keeps this flow of additional purchasing going, right? So, when it comes to like certain brand equity, there are people that play Magic cards like because they like playing the Magic cards, but then there's also like a whole set of people that are just buying the booster packs. Like my brother has unopened booster packs. Like my mom's house, like if you go to our like on our second floor, we have this massive like secondary living area. Like every time I go there, it's just stacked with like Magic, like unopened Magic cards, like the boxes. And I was like, what are you doing? He's like, that's my retirement right there. I'm like, bro, buy some stocks and bonds. What are you doing buying Magic cards? Like I got him to start buying stocks and he did really well in his portfolio. But he's like, he still has that massive collection of Magic cards. So he buys those and he buys like collector's cards too.
The collector's boxes. I know
Yeah.
all about it too much. Now, I sent you this guy's channel. I really hope you sent it to your brother and you started watching it yourself. This guy is insane. So Rudy, the Magic guy, has been making videos on YouTube for 14 years. He has built the largest distribution business outside of actually Magic and Pokemon. He is sitting on $50 to $100 million of cardboard just in his warehouses. It's insane. Like you go down these warehouses, it is insane. You have to just follow this guy. He is so crazy and just amazing. And
someone said he looks like Tevis.
Wow.
All right.
Yeah, I mean, like the amount of product this guy, like he does this to troll people with all the oil paintings in the back, and he'll just make videos at different warehouses that he owns and just sit in an aisle and just make a video and just talk. And he gets a lot of views, and he's the #1 authority in the TCG world. I mean, it's crazy. Anyway, not what I wanted to talk about. What I wanted to talk about is I want to get your raw reaction on something because I haven't shown you this. May trigger some people, but that's okay. Some people saw it last night. We're going to do it one more time with somebody else. The analyst community has spoken, Chris, and I think I'm dumb.
Okay.
I legitimately think I'm dumb. Would you like to take a bet, or not a bet because we're not putting any money on this? Would you like to take a guess as to what they think the revenue will be next year and the following year for SpaceX?
I don't.
Just take a guess.
I mean, if I had to guess, what are they doing right now?
Their IPO is 18.5 billion, I think. And then when you layer in the revenue from Google and Anthropic, it's something like 35 to 40.
Yeah, I mean, I'd say maybe a little bit higher than that because of their Cursor thing. I think Cursor was probably one of the most popular. Maybe like 50.
Jake Rizzo with 10 quadrillion. All right, Chris.
50 to maybe 60 billion, maybe.
All right.
Yeah, 50 billion probably, right?
The analyst community, and it's not one or two analysts. 19 analysts are saying that next year they will do 72.68 and then $143 billion in 2028. 19.
You want to know something? I hate to say this, but it is plausible if they do get Starship and V3 working and they also launch their mobile service. Like, I think that could be there, but that's still a little too ambitious.
Well,
I think it's probably But I mean, look at the low and the high. Look at the
I
dispersion
know.
on the two. I mean, it's between 60 and 190 billion. So I wouldn't necessarily go with those numbers
Yeah,
like
but
per
the
se.
average on the night, I'm just saying, I know that these could be very different, but the average right now is 143 and 28. Are you ready for the average EPS that they think is going to happen?
$5 a share. I don't know.
469. You were pretty close.
Yeah, yeah,
So if
yeah.
that's true, if that plays out, it trades at less than 30 times forward.
Well, no, I mean, okay. So here's the thing: when these analysts came up with these targets initially, they were doing it to justify their price
I know.
targets, right? And they were justifying their price targets because that's how they were getting allocated and shit from for the IPO, right? So basically, you're not gonna believe this, but if this thing dips below 100, I'm probably a net buyer.
Same here.
You know, I
Same
think I
here.
think the reason why is because I can see a vision in 2030 of probably 100 million plus subscribers to a combination of mobile and broadband. And I don't necessarily think that they're going to go straight into broadband. I mean, they're going to do broadband, which they do through Starlink. But the mobile piece, they'll have to partner with some of the terrestrial owners of spectrum, and then also probably like the infrastructure, like the backhaul and the optic lines. And that's why there was a rumor that executives were talking to Charter people, right? Charter Communication, because Charter Communications has a huge fiber optic network around the country because of its cable business. And then also they're already embedded in everyone's home. And then they also have customer relationships with almost 50 million people. So, and they're a net seller of mobile plans, and mobile plans are actually gaining traction in their core business. So if you think about it, you could probably create some sort of synergy between the two, saying that SpaceX will provide your, MVNO mobile partnership when you're connected to like more, you know, like local when you're at home. You've got these dual SIM routers that can basically provide like a secondary internet. So it's kind of a weird, all encompassing convergence strategy that could be applied. And if they're able to do it correctly, they could be a huge win for both Charter for SpaceX, because then you could literally have like a standalone mobile service.
I am opening up my mind, and Jake Rizzo, I hope you're sitting down, because I think SpaceX at around $80 would be something that I would be interested in. Maybe even 90. I think it's got to get below 100 for me to really put capital behind it for myself, not necessarily for my nephew. But I just don't think that this is something, if you're thinking 5 or 10 years out, if this keeps falling, it's going to become very interesting. And I can see it becoming a much larger company. It's just, do the numbers work for me? And I would want a little bit of a better deal. I don't want to buy it here. I think still the numbers break my brain a little bit, but if we get a good discount, and also I don't want to buy right now with a lot of shares. I think 96% of shares still have to become unlocked, and they start in August. So I would like to wait and see. But yes, under 100, I would definitely start to get interested. There's always a point where things get interesting. Just like PayPal, we've been screaming PayPal is an incredibly cheap company, but nobody cares. Well, now somebody does care, and it looks like Stripe wants to make a deal, and they're basically financing the deal for free off of PayPal's cash. Just
Yeah, I
their
mean,
balance sheet, not even free cash flow.
yeah, I mean, if you think about it, PayPal's got 9 billion in cash with about 9 billion in debt, so that's basically like a wash. You got about 6 billion that's coming in, that's free cash flow. You do some cost reduction, some synergy reductions, right? And you can take out probably another 1 to 2 billion. And then
Yeah.
you've got the synergies between the two businesses where you have both the client facing and the payment side. Combine those two together, you got yourself probably another 1 to 2 billion in organic growth. You're looking at what, like within probably 4 years, 8, maybe 9 billion in free cash flow just from the deal itself. With 9 billion in free cash flow, you give it 3 years, you basically paid the entire market cap of the company, and it's like, really? Like, that's a freaking no-brainer, So the challenge that you run into, though, is that there might be some antitrust issues. So you might have to, so PayPal might end up getting kind of like carved up like a turkey, where one company takes the leg, another one takes the breast, another one takes the gizzards and stuff like that. So I'd say the most valuable piece depends on which part of the ecosystem that you're trying to target. Like branded checkout is their moneymaker, but it's also the one that's being disrupted, sort of. But it does have a shit ton of free cash flow that's coming in. Then you've got Braintree, which is like linked to everything, and then you've got your Venmo, which is your fastest growing portion. And like I said, I think each piece could be worth something higher to the right buyer. Buying the entire thing by Stripe, in my opinion, is a great move by Stripe, because what Stripe could do is take it and then sell the other parts and finance the deal. You know what I mean? Like, if they can buy the whole thing for the 50 billion and then basically sell Venmo for 20 and sell another piece for like another 20, then basically they're chilling.
Yeah, I think the other
your
thing that
mic is,
people,
I think your AC is kind of loud. I'm hearing
I
Sorry.
with all the wildfires, I need, it's not the AC, it's the air circulator, because
You got wildfires?
the Canadian wildfires is fucking horrible over here.
Oh my God. I didn't know that they reached New York.
Dude, you go into the hallway of my building, you can barely breathe.
Yeah.
It's
Oh,
horrible.
wow. Wow.
The other aspect is Elon could come in and acquire it too, or try to make a bid and turn it into XPay.
I mean, you get 400 million clients like
Off the
instantly.
jump.
Like that's crazy value right there. The amount of people, like, I use Venmo right now to send money to people, to my mom, to my brother. Like if I'm going on something and I need to split some money, Venmo's great. They've got like all the agentic features now on there as well. So you've got a ton of synergies that could be good in the right hands.
Yeah, absolutely. And I think that this is going to be pretty interesting to see how it unfolds. We also have another piece of information before we get into Taiwan semi and everything else. Uber is making a deal. Uber is spending $14.8 billion to buy Delivery Hero. Have you ever heard of this company?
I have not, but it's not really my forte, man. Like I've realized that there are things that I need to stop researching, not because there aren't good opportunities, but because like the more I branch out, the thinner I become in trying to understand businesses. And it ends up kind of destroying any core thesis in certain things. Like, as a good example, like, it took me a long time to do my due diligence on United Healthcare, and that played out. But then what also happened was I looked at other things a little too much. And so I ended up selling, in my opinion, a little too early. I sold around 400 for a good profit. But had I still held on to a lot of those spreads, I'd be up even more. But one of the things is that when you try to chase everything, you kind of like miss on certain things that are pretty much just a winner, that are right there. So, like I said, I like researching new companies and new things, but at the same time, when you lose focus on your core thesis, you make it so that the value proposition in being in something else becomes higher. You're always looking for that next like recovery play, or that next like thing, and you eventually get to a point where you just stretch your portfolio too thin.
So I want to get your thoughts on the Apple lawsuit with OpenAI. What do you think is going to happen with this? So I have my thoughts. I said it last night. I want to see what your thoughts are on it, and then I'll give my thoughts too.
Say that again. I'm sorry.
The Apple lawsuit with OpenAI.
I mean, I think it's gonna be hard for OpenAI to try to contest some of this stuff because the employee that they got had some level of access to like a lot of confidential information, and basically the guy was kind of like overly selling that value proposition to OpenAI. Like it's one thing to hire someone from Apple, it's another thing to hire the person knowing that that person is coming with like proprietary information on a laptop and still has access to proprietary information while they're working for you. Like it's pretty bad. Now the question is, what is the remedy rather than what is the problem here? Like, can OpenAI settle out of court? Because I think that's probably the best course of action.
So my idea on this is you have 400 employees from Apple now working at OpenAI. If Apple pushes for discovery, I think that this is going to screw OpenAI over so bad that they're not going to be able to go public anytime soon. And I am worried for OpenAI what comes out in discovery, because you can't tell me there's not text messages, private text messages about this from the higher ups. And if it was one or two people, that's one thing, but 400 people, this could stop them from putting out a physical device. Who knows what's going to happen? So I think OpenAI is in a very big pickle right now, and I don't think they can get out at the moment. We'll see.
Yeah.
It's a lot of people. A lot of people.
Yeah, I mean, I don't know, man. There's not really much to say about the whole thing. I think we're speculating on something that has no impact to the general market. I think this is just one of those things like, among the Mag 7, they're always suing each other over like infringement here, infringement there, because at the end of the day, it just slows the other person down, right?
Yep.
So right now, Apple and OpenAI, even though they're not direct competitors, like I'm sure that if OpenAI releases a competing phone that could maybe theoretically disrupt the Apple ecosystem, like even in just name. I don't think that's a possibility, but I don't know. These things are hard to quantify without all the details and everything else. But I think it's a nothing burger, to be honest with you.
Okay. Well, Chris,
I think the bigger thing we should probably be talking about is just why the market is dumping semis. And why it's dumping them so hard. I think the reason why the market is dumping the semis as hard as it is right now is because we're going from this era of token maxing to token rationalization. On top of that, you're seeing all of these companies releasing more and more models. So you've got token deflation happening in real time, right? Like the cost of it per intelligence is going down significantly. So what does that mean? That means that eventually has to get paid for somewhere. So if you think about it, that's the hyperscalers, right? The hyperscalers are looking at this and saying, holy shit, like all of our equity investments in OpenAI and Anthropic, if they can't keep charging those crazy high token rates, how are they going to pay us? And if they're not paying us, that means that maybe we don't need as much data center capacity, or maybe we just don't need as much of it as right this second. You know what I mean? Like these guys have all been rushing to build out these data centers. And I'm like, what's the rush, guys? Like, I get it. There's a shit ton of demand, but that shit ton of demand is only there because you're not actually billing people for the amount of money that's actually being, like the value that's actually being generated by these AI companies, right? So the thing is, if you had to pay based on the real thing, then I'm sure a lot of people would be, second guess a lot of the spending. So you're sort of seeing this ROI kind of flip. And I think the market is a little bit spooked in saying, at what point do one of these hyperscalers say, we are not going to spend as much money going forward? It's not that they're not going to say we're not going to spend the money. It's just saying the expectations of us spending this crazy amount year over year, it's going to be curtailed down, and it's going to basically reflect on that. And I think the market is interpreting that and saying, holy shit, if the AI build out is even remotely like slowing down, that means that I better get out. And it doesn't matter like what price I get out at, because I've had 800% gains on some of my positions. Let me, take a step back, and it's fine. I mean, that's just part of a healthy market. So I think the market is just front running something that could happen 2 years, 3 years from now, which has been my sort of, I don't want to call it a bear case, but that's basically the bear case last month. I said, look, these things have run up to almost like $1,100, $1,200 on Micron. And I do get that the PE is low, especially if you're looking on a forward basis. It looks artificially really low because you're going to get all this earnings. But then at the same time, I'm like, well, what about the year after that? And then the year after that, where growth is going to go from like 70% to maybe 40 to flattish, Yeah. And so I think the other thing I think is the hyperscalers, they're very incentivized to not overspend because it's hurting them now. Last year, they could say, I'm spending $200 billion, and everyone will reward them with a $200 billion of equity increase. This year, the exact opposite is happening. Every time these guys are saying we're going to spend more, what happens? Their stocks crater. The Mag 7 are basically turned into the Lag 7. You think the Lag 7 want to be known for that? And then on top of it, when you tell your customers, hey, listen, we're going to spend $200 billion, what do you think Micron, SK Hynix, Samsung, what are they going to do? They're going to say, holy shit, if you guys are that desperate for memory, I'm going to increase my prices. I'm going to capture the value while it's good. I mean, no shade to Micron, to SanDisk, and to Samsung for basically grabbing these guys by the nuts and saying, I'm going to freaking squeeze as hard as I can while I can. But as investors, we have to realize that, there's two parties here. There's the buyer of these chips and the sellers of these chips. And right now, the power is with the sellers. But at the end of the day, the buyers are the ones with the money. Eventually, the buyers are going to say, sorry, bro, I'm tapped.
Lag maxing.
Yeah.
Love it. Lot to unpack. I went through Taiwan Semi's earnings, and full disclosure, I just put in the chat, I actually just bought more CoreWeave about a minute ago. I'm averaging down. Taiwan Semi knocked it out of the park, 40.2 billion in revenue, up 33.7% year over year. And the biggest stuff out of the earnings, without going through all the operational highlights, was they raised guidance and they specifically addressed CapEx, and 2026 CapEx just got raised again from Taiwan Semi. They are now going to spend between 60 to 64 billion instead of 52 to 56, which was already raised. And they lifted the budget by 10 billion since January. Now, the big announcement, they're going to do an additional $100 billion investment in Arizona and take their total U.S. commitment to 265 billion. And they are going to do 4 more fabs in the U.S. for 2 nanometer and below, plus advanced packaging. Now, I have no idea when this is going to stop, but Taiwan Semi, Micron, these companies are not making these types of investments. Samsung and SK Hynix, they're just not making these investments if the spend is going to decline. Now, Chris is probably 100% correct that the growth rate is going to slow. I mean, it would be very hard for anybody to make a case that I could agree with that the same rate of percentage increase can be kept up. It's just not likely. Now, we do know that over the past 3 years, it's been a year-over-year accelerating growth rate. At some point, that slows down. My guess is 2028 is the year that the accelerating growth rate slows down, but that doesn't mean the dollar amount slows down. And 100 billion year-over-year increase would be the equivalent of a very large percentage slowdown, but not a dollar spent slowdown. I think that that is something that is absolutely feasible to happen. We are, I mean, unless next week Microsoft comes out and absolutely shocks everybody and says, you know what, we're only going to spend 150 in 2027. Unless that happens, I think that these companies are going to shock everybody in what they're going to spend next year. Now, you got Larry Fink out there saying we're not spending quick enough. We're not building quick enough. Pat Gesslinger on All In, ex-CEO of Intel, saying that the build out is decades long, not years long. There's a lot of speculation. I think the market is going to be a whipsaw, to be brutally honest with everybody. I think the market is absolutely going to be a whipsaw on this because everybody's going to be looking at this data different ways. And we got no idea. The one thing that I can tell you that Chris is right about, and he's been right the entire time of this, and I got on the bandwagon after him, LLMs will be commoditized. We're already seeing it. Anthropic, just today, they extended it again. Like, there's no way that these LLMs are not already commoditized, and it's going to get even worse. The question is, when the price per token drops to where it is actually really cheap, is it going to be the same amount of tokens being used, or are we going to see an accelerated amount where these companies make more money on a cheaper price per token? And I think that that's the big thing that we need to try to conceptualize, is that's really what the trade is going to become.
I mean, you want to hear my opinion on this whole thing is that when you look at where you want to be in all of this, which companies are going to have the most durable path forward, one of them, of course, is going to be the TSMCs of the world, right? So the good thing about TSMC is that, yes, is memory cyclical? Yes, it's very cyclical. Are CPU cyclical? Yeah, they're cyclical too. But the thing is, like, that's not the only thing. Like, they have a diversity of things. Like, remember, they make money on basically producing these chips, right? And if you ask me, Chris, are we going to need more chips in 5 years or 10 years from now, or are we going to need less? And I'll say to you right off the bat, we're going to need more, right? So TSMC will be fine. The question is, how much of that future is already kind of baked into the sauce right now? And then on top of it, which I think is probably a bigger reason why TSMC is down, is actually Intel. Intel, I think, and don't quote me on this, but I think could one day be a massive competitor to TSMC. TSMC for the longest time has had pretty much like almost like a pole monopoly position on a lot of these industries. And TSMC just came out with their some of their newer technology on packaging. The research that I've been doing tells me that Intel is going to be picking up a lot of orders. And the one big order that just got picked up, and I don't know if you've been checking this, is Google. Google's next gen TPUs.
I have not seen that, no.
Yeah, check this out. Right here, Intel gains on a report that Google will use its chips, but basically, this is the packaging technology that right here is on Tom's Hardware. So Intel's EMIB packaging giants traction as chip designers look to skirt TSMC's CoX constraints. Google's reported decision for 9th gen TPUs highlights Intel attractive alternative. So if Intel is actually picking up things like Google, and Semi-Analysis actually kind of published this whole thing too. So if you want to read it, it does come with some risks because it's a newer technology. Right here, take a look at this. It's worth looking at. So yeah. So once again, I don't know if TSMC necessarily, even if they're spending a lot of money on capex, can't get re-rated lower in terms of their future multiple. So if we just look at their forward multiple right now, it's probably at one of the highest points that it's ever been. TSMC. We just do it on dollars. Financial. Look at this. On a forward multiple basis, TSMC, every time it's peaked around 15, it's here. So there's not a lot of places for that multiple to really expand, but it does have a lot of room where that multiple could contract. You know, even if, like, let's say the revenue numbers don't necessarily go down and their growth actually stays fine, right? Look at this. It doesn't mean that their multiple can't come down. So, I mean, sorry, this is Taiwanese dollars. This is US dollars. So I would say if you look at this, like 261 in revenues, I wonder what the EBITDA is going to be, especially if they're building all of this additional capacity. About 192 billion in EBITDA in 2018. And let's say their multiple contracts probably down to like 10, which is more historic, 10-ish, let's say. So that's what, 261 times 10. That's 2.6 billion. What's Taiwan Semi's market cap right now?
Taiwan Semi's market cap is 1.97 trillion.
Yeah, so you're looking at probably, I mean, they're even with their buybacks, they're pretty flat. Yeah, you're probably looking at maybe some additional gains, but probably not by much.
Yeah, Intel's interesting. I certainly missed it, and I made a joke, and I think TJ actually bought it off my joke, saying that we should be looking at when it was at 19. I actually sold it when they reduced the dividend because I owned it in my dividend portfolio because it was yielding about 4.5%. And Intel has been trying to get really into the fab business for a long time. They could become, now the fabs lose money still. There's a reason Qualcomm tried acquiring them. Those fabs are going to be increasingly important. Now, while Taiwan Semi is making the investment in America, they are also building out, I think it was 13 leading edge and advanced packaging fabs in Taiwan over the next several years. The U.S., we know that the CHIPS Act has allocated money. We know that from a national security and a strategic aspect, we need more fabs stateside for the supply chain. So we're not as dependent on Taiwan, not Taiwan Semi, but Taiwan in general. It also reduces shipping time and everything else. I could see a world where we need so many more chips that Intel, because of their foundries, is still a good investment over the next 5 or 10 years because we're going to need a lot more chips. I mean, technology never slows down. Technology never reverses. This is a genie that's not getting put back in the bag. We still don't really have robots and we still don't have full self-driving. So we are going to need a lot more compute. And if quantum actually becomes a thing, who knows what we're going to need for that? And I think the big aspect is Apple right now. Apple's new computers, they're skipping the upgrades on M6. They're only doing a flat M6 chip. The M7 line, when you get to the Ultra, they are making that chip so it can support 1.5 terabytes of RAM. They are going past gigs, and that computer will be able to hold 1.5 terabytes with the sole purpose of being able to run these AI models locally on your desktop or laptop. And when you see that, at least when I see that, I'm thinking to myself, there are so many more years left in this. There's going to be peaks and valleys, and I have no idea what's going to happen. it all comes back to the hyperscalers, in my opinion. And look, they can, for me as a shareholder, and I'm probably in the minority here, which is fine. I could give a shit if they do no free cash flow for the next 2 or 3 years. I really could give a shit because I'm investing in them for 5 or 10 years. I've owned them for a long time. And I've been in Amazon and Alphabet since before the pandemic. There is nothing that's going to shake those out of my hands. And if they do negative free cash flow, it doesn't matter because the reality is nobody can really compete with them. And with what they're building, they're going to pull away so far that there's going to be 5 companies really controlling this. And if you're a short-term investor, you're getting smoked right now. But that's why you can't have a short-term mindset unless you're a legit trader and you can take your emotion out of it. I mean, look at CoreWeave and Nebius. They're falling like a rock. Look at ASTS and Rocket Lab. They're falling like a rock. Rocket Lab's at 66. Like, if you have emotions and you're investing with money that you need in a short period of time, these high beta names can crush you. And I do think that the drop in some of these companies is over exaggerated for a very specific reason. I really believe, and I've said this time and time again, I think there's too much leverage out there. I think there's too many ETFs that are single stock or leveraged ETFs. And when you get in a downtrend like this, people get stopped out of positions, algorithms take control of it, and you have a lot of forced selling. And that just magnifies the downfall. Now, I'm not saying that these companies should have got to where they got to, but the downturn is overly sharp because of those issues. And maybe they keep going down further. Maybe they do. But you know what? We get really big earnings next week. We got Tesla, Meta, and I believe Microsoft next week. And Microsoft's the key. That is the number one key right now.
Did something happen with Trump?
Trump's speaking tonight.
No, I know that, but did something just happen?
I have no idea why.
I don't know.
You go to
Like
True
some people
Social.
in the chat. Some people know in the chat, like people are talking. So I was like, I wonder.
Nothing is posted on Truth.
Okay.
Nothing is posted on Truth.
All right. It's sad that we're at this place in the market where we've got a president in charge who's basically like every day it's a new thing, man. Like no matter what you do to craft a thesis, you can't craft the mind of. I think he's going senile, to be honest with you. I think he's losing it.
Chris, I gotta stop you for a sec. Basent spoke while we were talking.
Uh-huh.
This is what Basent said. The people building AI have done a terrible job of explaining it. When you go on Google, that's AI. When you use spell check, that's AI. It is just growing and it's going to be able to do more for you. The optimistic view of AI is that it's going to let small businesses compete with big businesses. You could start a business that used to take 10 people with just 1 or 2 people. We've seen no job loss from AI yet.
Good. I hope so. I agree, sort of.
Oh, I agree.
I mean, I think if you're good, especially if you're very entrepreneurial, you'll figure out ways to make money off of this thing. You know?
Oh, yeah.
Like it's just a matter of like where you are in all of this and how you're thinking about the markets and how you can provide value to a place where there's not much value. You want to know something? I did something this morning. I took a call with public.com. I don't typically like affiliating with like brokerages and stuff like that, but I was like, all right, let me just like hear their pitch. I'm thinking about like getting an affiliation with them only because I'm trying to use their bond platform. I feel like the one thing retail shareholders don't get a lot of is exposure to bonds. And I think I'm going to probably be like a bond cheerleader. I thought about it. Like if you've accumulated enough wealth, now is the time to lock in these rates while the rates are good. Like imagine locking in an 8%, 9% yielder, and then on top of it, another like 40% in cap gains, you get like equity like returns at this point.
Yeah, I mean, it's certainly interesting, and you really understand the bond market. So, I mean, yeah, it would make sense. I get that. I'm interested in
Yeah.
public's agentic trading. And what I was going to say is I wish my nephew was like 2 or 3 years older because he's 10 right now. I'm even thinking about, I'm going to have a conversation, see him over the week. I'm going to have a conversation with him. I almost want to set him up with Anthropic account with Fable 5 and just put a limit on his tokens and say, build whatever you think you can build. Like build a video game. Just do something. Like I actually think I'm going to do that this weekend and just seed him with money and just see what he can come up with. Because children's imaginations can come up with really wild things. And I want to see what he can build. And I would love for him to go into being an adult with already stuff behind him, you know?
It's funny. The chat is like, Chris is already so rich he can do rich boomer. Nah, man, that's not the
You
right
can
way to
make
look
real
at this.
money. Listen, stocks are not the only way to make money. You can actually make real money buying bonds at a discount, collecting the dividend off of it, and then selling them when they rise. Bonds trade at a discount to par value all the time, and you can actually make money doing that.
I'll give you an example. Like anyone who's been on my Patreon, they know about Tellurian. We were buying TELZ, which is the baby bond of Tellurian. Yeah. The day that they got acquired, that thing jumped 100 something percent. Like, you know, and you were collecting almost a 11, 12% premium on top of it. So it's one of those things that, like, I feel like this generation's just never experienced what bonds are like. And I guess it's for sophisticated investors per se. But look, if you can get like I said, a good 7 to 10% return per year safely, and then on top of it, get some capital gains from, let's say, future maturities getting higher, you're looking at a pretty good return, you know? And I think the market is just like I'll give you guys a good example. Let me just show people what I mean. Like, let me bring up public.com for 2 seconds. I don't have any money in this thing yet. So I can't find it. I'll just have to use Webull to show people.
Okay.
Okay. Can you see this?
Yes, I can.
Okay, so these are different corporate bonds out there right now. This is like the Mag 7 corporate bonds. Okay, so you've got like Meta, Amazon, Microsoft, Oracle, and Google, right? So these are not like shitty companies. These are really good companies. You got Microsoft's bond that has a 3% yield on it, right? But you're getting to buy it at 57 cents on the dollar. Amazon's 3.25 is 58 cents on the dollar. Oracle 6.1 is trading at 80 cents on the dollar. That means that if you buy this right now, the yield to maturity on this thing is almost 7.7%. And that's not including the gain that you would make, that 20% gain, if interest rates get cut and Oracle gets better. This thing could shoot up to par like it was over here literally less than a year ago. In November, this thing was trading at $93, let's say. Now it's trading at 79. So if you buy this, Oracle says, hey, I'm going to cut CapEx guidance and we're going to basically go and pay down the debt. And at the same time, you get like future rate cuts. This jumps all the way to here. So you're going to get almost a $20, $20 upward move. So that's 25%. Plus you'll have locked in a yield of almost like 7.75%, you know? So it's a pretty good deal, you know? But like I said,
I mean, look,
people really want to.
The bond market is a huge market, and I think people just don't look at it because it's not as exciting because it's debt. But you know what? There's a lot of people that make a lot of money in the bond market, so we'll see.
Yeah, Yeah, no, there's like I said, there's like I've never seen this many opportunities for investment grade bonds that are yielding great returns. And if you compare it to like the S&P 500, like S&P 500 right now, if you just buy the index, like you're looking at not exactly the greatest yield on this thing because you're buying it at an all-time high in terms of like a cape ratio. So, we could be in for right here S&P 500 earnings yield. The earnings yield on the S&P 500 is only 3%.
Yeah.
Let me just show people 1 second. Now, the thing is, what's masking this earnings yield right now is that the growth rate on the S&P 500 is actually accelerating. So if you look at this, the screenshot. Share my screen real quick.
Yep.
So the earnings yield on the S&P 500 right now is only 3%. Okay, so you're paying a pretty expensive premium for a lot of, even if you're just buying the S&P 500, the mean for the S&P 500 per year is about 7% compounded. So if you can get a 7% fixed income, recycle all of that back into future purchases, you're looking at a pretty good compounded yield over a long period of time. So, just saying.
Yeah. Look, you can make money in the debt markets. There's no question about it.
Yeah, especially when the market is like where it is today. It's not a bad idea to have more fixed income exposure.
And let's cut over to the market. Let's see what's going on. We're going to get into some stuff. So it's still not what you want to see when you look at my watch list that I've constructed. Nike #1, Milken's happy about that. I'm happy about Salesforce. When I have the amount of technology stuff in the watch list, you never want to see Realty Income, the third largest mover. And then Verizon #4 and VC Properties #5. You never want to see that. That means a true flight to safety is happening because these are bellwethers for income. You got Costco up, Coca-Cola 8416. What an incredible company this is. I'm probably one of the only people that owns this. IBM, cannot wait for the call next week. Microsoft finally got over 400. We are finally back over 400 heading into earnings. Hopefully this holds. Apple.
Yeah, I think
all-time highs. 331 all-time highs on Apple. Gotta love that. We got Netflix this afternoon. I'm not sure if Amit is doing the market close or not. If he doesn't, I will do the Netflix earnings call.
No, he's doing it.
He is? I thought he was going somewhere today.
No, he is. Well, at least when I was on stream, that's what I heard, that he was doing it.
Yes, we're shooting tonight, so maybe he's leaving. All right, so anyway, Amazon 255. The market's starting to come back. It's just the high beta names, and I say this all the time. High beta is not for everyone. If you're in the big companies, you're not feeling it today. QXO, 1532. I'm liking it.
There's a condor play on QXO, right?
A what?
An iron condor play on QXO because they have those $25 convertibles, right? And the premium on QXO, because it went down so fast, is actually very attractive. So there's actually a pretty good iron condor strategy if this thing doesn't break above 25 in the next probably year, which I don't think it can in the next year because of just how much acquisition debt that they have right now that they've taken on, and how much this thing is going to be a slow compounder, but the market is anticipating a quick move higher. And I don't think that that's how Brad Jacobs operates anyway. If he sees the stock running, he's going to be like, okay, what do I acquire next? So let me just take a look real quick and I'll show you what I mean. QXO. Sorry. So what happened was with QXO, if you look at the volatility spike, this thing spiked all the way to 27 and then came back down to like the 13s, right? So the IV on this thing is pretty high right now. So the what do they call, the options on this are actually, let's see, January 2027 and Condor. And I'll do a $10 Condor. This is the one. Sorry, give me 1 second.
Yeah. Take your time. So while Chris is setting it up, I'm going to keep going. Oil is under 80, which is a good sign, ladies and gentlemen. We got Take-Two, 242. We have Service now at 103. It's come back a little bit. Tesla, 389. SpaceX, 133. TKO Group, 183. Meta, 670. SoFi, 1750. Look, with people talking about rate hikes, SoFi is not going to catch a bid right now. Even though I think Q2 earnings are going to be good, I am not holding my breath for SoFi getting above 20 anytime soon. I think the narrative around rates has to change. I think it's going to be confined to that because, look, unlike JP Morgan and Morgan Stanley and Citigroup, they don't have a large trading department. The big bank earnings were absolutely boosted by trading and market activity. SoFi just doesn't have that. That their majority of their business is originations. So for now, I'm very interested to see what SoFi does. We got NVIDIA 207, Fortinet at 159. Taiwan Semi is down a little bit. Qualcomm is getting closer to where I want to start a position. Reddit falling again. AMD is trying to stay over 500. And then we got the big losers. Micron 850. ARM 253. Marvell 188. IREN 3486. SanDisk 1431. Nebius 174. And I'll tell you this, and I won't bring up a chart of this, and then Rocket Lab 66. A lot of people were piling into Nebius, and I'm willing to wager people were going on margin piling into this thing because it was a rocket ship and they thought it was free money. I am willing to bet that. Or they were selling cash secured puts. Look, it's tumbling, and I don't think that you see this type of tumble right here without margin calls happening or without stop losses getting triggered. I mean, this is falling like a rock, and it could get worse. There may be no stopping this. This may go back down to 125, and people have to be ready for that.
Yeah.
So, all right, do you have your Iron Condor ready?
Yeah.
All right, let's bring it up.
Okay, so basically you would be buying. It's a 4-leg strategy. The thing is, the volume, I don't know if you've seen the volume on this goddamn company. The contracts are freaking crazy. Like, did you see the open interest on this?
No, bring it up on your screen.
All right, so let me just show people. So this is the play. This is not the play, but this is the setup, right? So essentially what you're doing is you're buying a $15 call, you're selling a $20 call, right? And then you're selling a $25 call. Let me just double check. Hold on. Yeah, you're selling a $25 call, and then you're buying a $30 call. And what that does is basically subsidizes the crap out of your long exposure, while also at the same time you're collecting a ton of premium, right? And because of that, you're getting a nice winged thing. So your break even ends up being like $16.18, which is like $1.18 above what it's currently trading at right now. And your max long is $25 with you start losing money at 28. So your max loss is, let me just show people 1 second. Your max loss is 118, But if it finishes between 20 20 and 25, it's like 382, and then it's like different profit levels depending on the where it ends up. And the thing is, you could always close this out as it gets closer to the date. What's that thing called? Expiration date. But if you think that this thing is between $16 and $28 in the next 8 months, this might not be a bad place to be.
Yeah.
The thing that I like about it is that what the market might be mispricing is that there are a bunch of convertibles at convertible debt that's issued at like 25. So the thing is, like, there's like almost this weird thing where, let me just show you what I mean. Hold on. QXO. So it acts sort of like a barrier right here.
All right. If you bring it up, I'll bring it up.
Okay. Right here. Can you see it?
Yep.
Yeah. So right here, Apollo Global's preferred investment sized up. Conversion price is $23.25. Then they've got another one right here, QXO previously raised a common stock offering priced at 23 to help fund aggressive M&A. So it's almost like anytime this thing gets sort of like closer to that higher end of the target, they will probably issue shares, or there's going to be like this convertible wall that's standing in front of them. So yeah, I think, like I said, I think between 15 and probably 30 is a good target. What do you think? What would you give this end of year price target?
QXO is difficult. I just did a full article on it, and I am so bullish on QXO, but it's a rate play, and it's a company that's misunderstood. Market cap's under 12 billion. They just acquired Top Build for 14 billion. They're at an 18 billion revenue run rate. I think QXO should be a 25 to $30 billion company right now. And I think by 2030, there's a chance that they're a 40 or $50 billion market cap. But
well,
they need rates.
Wait, hold on a second. What's the current diluted share count on them? Because I think so it's 11 billion in market cap right now. Enterprise value is 13 billion.
Yeah, I'm not doing it. I'm just doing it off a market cap. But if you look at the enterprise value, it's significantly more because of the debt. Yeah.
Okay, so that makes sense then.
Oh, Tanner, if you want to come on, I will explain it with you here so you can refute it. It's I tried picking Tanner's pocket last night.
About what?
I tried being a scumbag and picking our buddy's pocket.
Oh, you mean trying to get a discount on his wins and give him losses?
I was trying to take advantage of a wounded Tanner.
He's not wounded though. He's up. Like
but I have to act as if he's wounded.
What kind of negotiating strategy is that? Like, he knows he's in a good position. Why the hell would he trade his good position for your bad position?
Because I felt that he wasn't sleeping enough, and maybe I could pull one over on him.
Bro, you Italians are terrible at making these deals. What happened to you, man? Like, this is like, come on, man.
Listen, I don't just want the cherry. I want the whipped cream, I want the sprinkles, and I want the ice cream.
Yeah, but you got to get the other guy to agree to it. You can't just be like, okay, my pizza's costing $120. No, I'm not buying no $220 pizza, bro.
Listen,
like you don't start the negotiation at some unreasonable number, bro. If you're gonna haggle, you haggle at least somewhat reasonable before you go somewhere with it.
The reason is I actually don't want to do a deal, so it had to be where I would say I'd be crazy to say no.
Like, what do you have over it? Like, do you have some kind of leverage over him?
No,
like,
I know he
did
wants
you kidnap his dog or something?
I know he wants CoreWeave.
He can't want it that desperately where he'll absorb your losses.
He didn't want it that desperately because he said no. So
I think I don't know, man.
And I don't even know if the trade I was proposing was legal or not. So I have to relook at the rules. I don't even think I can do it legally.
It's definitely not legal.
Definitely
Definitely
not
not
legal,
legal.
probably. So
That was not on anyone's like radar that you would absorb someone else's losses.
Tanner, come on for 5 minutes. I sent you a link. Come on for 5 minutes. I know you have a stream at 1:00. Come on for 5 minutes.
He said, I will trade you my best name for your worst name. And here's the thing, I want your winnings and you take my losses. Like,
That's right.
no, that's dumb.
That's
Like,
right.
Sorry, dude. I mean, Tanner is right to reject you.
Of course he's right. I was trying to be a scumbag, and I fully admit it.
Yeah, but that's like, what do you go like? Do you do this in your personal life too? Do you just randomly walk up to the store and be like, I want this milk for $1?
Listen,
absolutely trying to scam me. I couldn't believe it.
He's not trying to scam you. He's just being an idiot when it comes to like deals. Like I would have started at just like a fair trade and said, listen, Tanner, you know, I know you really want CoreWeave. I think we have a trade here. What do you think would be a fair like and you start there and you kind of work your way into a reasonable counter, not like, fuck that. I want all of your best plays. I want you to absorb my losses. Like,
yeah, I thought he was going to say rubric for CoreWeave, and I was like, ooh, I don't know. This name's working for me. But then he said, but I want it from, you know, day one prices. I want to take all your winnings. And then you take all. I was like, how old do you think I am?
Come on, you gotta be at least somewhat reasonable in your open, man. You can't just go to a negotiate. Like if someone's selling me a house for $1 million, then just go to them and be like, yeah, I want it for 500. They'll freaking kick me out.
Chris, what do you
start
want?
at? Hey, what do you mean? From your portfolio?
Yeah.
What
do you got to trade?
Oh, I'll bring it up. Let's see if we can get a little trade.
God, no one wants the trash that I have right now.
I'm gonna shut up. I'm not gonna say anything. Let's go.
I had the worst in terms of like timing that you could imagine. Literally,
I mean,
I've got
Marvell. What do you think about that? Is that up to trade?
I like Marvell, man. Especially like if memory really is gonna like what do you want to trade for Marvell?
I don't know. What do you want?
All right, let's go to Tanner. Let's go. I like doing this broker stuff live. This is good.
Honestly, Chris, I am not counting you out at all because you have some of the best. Like I think you actually picked the best name in the whole draft. But all the stuff that is really down can come back very quickly if AI names come back in season. So honestly, I am not counting you out of this draft at all.
The only thing that I would want, and you probably wouldn't sell it to me anyway, is probably like Microsoft. You know, Microsoft is probably the one that I'd ask for. Which one would you want?
And you don't want my winnings, and I have to take your losses, right?
No, I'm not going to do that. I'm fair, man. I'm fair.
I'll think on that.
Okay. Look through my trash pile. See if you want anything.
Yeah. Because Marvell, I'm getting there's a decent discount there.
The thing is, Marvell could come back nicely if they do show some really positive numbers on their CXL platform. That could really boost them up. Same thing with IREN. IREN was like one of the things is last year when I was that I sort of got killed on when it came to my portfolio is that I went with a lot of safe bets and I didn't go with a lot of smaller names that had like a lot of return potential. So my portfolio was a lot more, flattish for the most of the competition. And then Marvell kind of just helped me out. IREN, I feel like if they get a deal soon, their fortunes could change. I feel like a deal is in their future.
The problem with the draft is that the people that won last year won by picking high beta names that really ran. And the truth is that Chris would never build his actual portfolio like this.
No, I have
to either win or come last.
Yeah. The only positions that I have in this are ServiceNow, Norwegian Cruise Lines. I have a little bit of IREN, but that's just as a speculative like options play. And I have some Viva, just the stock. But that's it. Other than that, my portfolio is Salesforce, Microsoft, Meta, Norwegian, Carnival, what is it called? Where's some other names? Charter Communications, which is up today. Comcast, which is up today. Verizon, which is up today. Things like that.
Mm-hmm. Yeah.
Yeah.
Yeah. I came in too balanced last year, and it just left my portfolio being super flat. And this year, honestly, the balance of my portfolio is actually just keeping me above water, which honestly is like no one's really standing out in their portfolio. We're just survive. Like Matt and I are surviving. Steve's almost surviving. You know.
Well, that's because we all bet on the AI trade, right? So depending on your level of exposure to the AI trade is how you're performing right now. The only thing that's saving me from being even more negative is that I do have some green plays. You know, Viva. What do you call
Viva
it?
is, I think, the number one in the whole draft.
Yeah.
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 I worry
I've got
about
some
Jason.
of the biggest winners and the biggest losers.
I'm not counting anyone out. I worry about Jason's portfolio. I don't even know many of the names in it, so it's hard for me to.
Can you go to it?
Even
Steve?
rank it too well.
I mean, Jason's saying I logged everything as short positions, so you know.
Yeah, but that's a terrible. Like he can only rebalance 2 of these names. So, yeah, it's hard.
I mean, I can't believe Nebius is his biggest loser. But then again, my Iren is my biggest loser, so it kind of makes sense.
Yeah, I should talk to Jason if he wants to get out of it. Maybe he's the guy to trade with. Maybe he wants out of Nebius.
I don't think so.
I don't think so either.
I would not want to absorb that hit to Iren unless I got like something really, really good for it, because that means that like I have to like really believe in the other side of it, and I have to believe that Iren can't come back, which I don't necessarily think that's the case. I think if Iren were to announce a damn hyperscaler deal, which you would think that they would be doing right now, like what the F are these people doing?
I mean, Iren's in a different situation than the other neoclouds, in my opinion, but yeah.
But Iren's got freaking energized power right now. Like they literally have 5 gigs worth of like actual power. So if you're building out the data centers, you would think that they would be able to get a deal signed with one of the hyperscalers.
What do you think about like my understanding of some of these data centers is that, and I got to go here in a couple of minutes, but that just because you buy NVIDIA's products does not mean that they perform equally, right? That there is a huge technical side to keeping these data centers online and also at extremely low latency, which separates the names of the CoreWeaves from Nebius, and how CoreWeave can charge more on a GPU base than Nebius is because they have better latency and better uptimes. Iren.
Well, that's what White Fiber's whole thing is also. Like, if you look.
But whenever I look at Iren, and I was looking at Semi-Analysis Cluster Max ranking, they have them at like they don't even rank them. They put them as like an underperform, cautious ranking. Does that not worry you that maybe the hyperscalers don't want to deal with them because they don't have the technical expertise?
Not really. I mean, my thing is they're probably going to do some sort of deals where the hyperscalers would end up owning the what is it called? The actual infrastructure, not the infrastructure, sorry, the build itself.
Yeah.
Right? And then the build itself. Yeah. Yeah. I mean, at some point, if they've got all this energized capacity, that's the way to go,
Yeah.
So I don't know. I just like, you look at one of the picks that Ashenbrenner, I don't know how to say it. I'm sorry if I mispronounce it. He has White Fiber in his portfolio, and I was looking up White Fiber, and White Fiber does like retrofits on their data centers. But what's interesting is the reason why they do retrofits instead of just straight up greenfield development is that the proximity to where the retrofits are is like very close to like the cities, right? So if you look at Cerebras whole thing is like super low latency. So you kind of want to be like as close to the location as possible, right? So you could get some premium on that. So I mean, I'm not sure like how that eventually plays out. But I just think Iran has some really, really good assets, and I really don't know why they're not signing some deals right now. Like, it feels like every other day, TerraWolf is signing a deal. Like, what the hell, bro?
Yeah, but didn't Iren say something along the lines of like the amount of deals that they could sign is like off the charts, but they're looking for the right partner, not just any partner? And it's like, that sounds so dumb. That sounds wrong. Why don't you pick the partner that's willing to pay you money? How about that? Pick that partner.
Yeah. And then on top of it, you're spending this money on $50 million a year in fucking endorsements with the Warriors. And then you got the stupid Sphere thing going on. You know, so, and then you got the CEO's compensation. Like, that was another, like, shot to the, like, a hit to the gut, which is like the co-CEO's compensation is straight up, like, shares and not performance. Come on. And the market's reaction to that was very piss poor. You would think that the board would turn around and be like, whoa, wait a second. Let's kind of, like, reframe this. And their entire logic was, no. We think what we did was right because in the past, this happened. And it's like, no, you need to placate shareholders. Otherwise, the shareholder is going to rebel.
So why'd you pick it?
I looked at the assets and thought the assets were great. Like, everyone is talking about how much, like, capacity they need, and they've got 5 gigs worth of energized capacity. So I'm
not talking about performance, by the way, because like CoreWeave, Nebius, they're all down roughly 40% right now. Like, that's not what I'm just...
They were also smaller, and I thought that they would have more potential for an upside, especially if they got a re-rating very similar to Nebius and CoreWeave. So to me, Iren was, one, they have good assets, but it's also a good catch-up trade, which clearly it didn't turn out to be. But, I mean, CoreWeave's issue is that they have a crap ton of debt. Iren doesn't have a lot of debt, you know, so.
Yeah.
And Iren also has their Bitcoin mining operations that can float them for a little bit. So, like I said, I don't think that Iren is bad. I just think that they've got, like, our timing couldn't have been worse. Like, literally, the draft was probably like the worst day like, we literally top picked the AI trade.
Yeah, dude, that a lot of people are. I knew this. I texted you guys. I was like, people are going to rinse us because of the time that we invested. But it's really important. We should put something in there to say the date that the actual thing started and what the S&P was at on July 18th. I think it's important to know where the market was whenever we started, because this is not a year-to-date performance. It's specifically July 18th, which was like a really, really big bump, and then it ended up going sour since then.
I think people understand that. I don't think that's like...
Tanner, you realize the S&P is up from when we did the draft, right?
Yeah, no, but it's not as much as people think.
To make that clear.
Yeah. Do you guys not see the comments about, like, you know, people rinsing us saying, oh, these are quote unquote experts and stuff like this?
I don't care, man. Let them.
It's fine. Why would you care?
I'm in second place. I'm not even worried.
Do you think I care what anybody thinks?
Mine looks fine. I'm talking about you guys.
Why would I care?
I'm just saying, you know, it's good to add the clarification that
no, don't feed the trolls, man.
I feed the trolls all the time, but I gotta go. My stream starts in 5 seconds. Peace.
Later, Tanner.
Good luck. Yeah.
So,
man, don't feed the trolls. I think we're in the right.
There's no feeding the trolls. We don't forget the trolls.
Yeah.
Forget the trolls. It's all good. We're gonna go back to stocks in a sec. Chris, I gotta show you this. I've been looking at stuff from Fanatics Fest. We're in the wrong line of work, sir.
What should we be in?
You guys see this. This is from last year. I can't wait to see what crazy shit comes out this year.
Okay.
We got it right here. Right here. It's got the best opinion. Which card is it? Black Prism. What's it worth? What's it worth, bro? $2 million. $2 million. Mike, what's this really worth?
Hey, Paul Skeens is 1.2. What's his best car worth?
That's a debut best, huh?
That's all the commanders. What do you want to sell?
Show the other one. What's it really worth, Mike?
Can I say this? Alexis, Serena Williams' husband, put a public bounty on that card before it got pulled. First one for $250K. First bounty, Raw. Before ever. So we outbid him, and now it's a 9-5. And Jaden cooked in the playoffs. We're the biggest Commander fans in the world.
In the world. All right, one time, $500,000. You want it? From Josh Harris with Jaden here right now. And you're going to sign Jaden's jersey back to him. $500,000 one time. You want it? Yes or no?
Ruben just making
the most expensive
in public with the owner of the Commanders. Like the amount of stuff that's going to go on with Fanatics, I'm telling you, Fanatics is a company. I don't even need to see the numbers. I will invest a little bit, but if the numbers are good, this will become a real investment.
Jesus Christ, man. Marvell is just whew. Marvell is so cooked. So, man. The only thing is I don't have it in my personal
Chris, this can
portfolio.
turn in a week. Microsoft next week can make Marvell and everything else turn.
Or it could kill, or it could
happen.
smash them. Or it could smash them.
The data is not on that side.
For now, shit, Microsoft's doing nicely, though.
Look, here's the thing about Mr. Softy. These are the facts. This is not opinion. These are the facts.
Yeah.
The facts are that Mr. Softy's CFO came out and said they will do 190 billion of capex in 2026. They do not report on a calendar year. They report on a fiscal year. Next week, they give their 2027 guidance because they start a new fiscal year.
Mm-hmm.
Amy Hood is going to come out and discuss what their capex plan is going to look like. They've already said they're going to double their footprint in the next 2 years for data centers. So when she gives her prediction, or I would say benchmark, it's Q3 and Q4 of 2026. So the back half of this year where they're going to spend 190, okay? In addition to Q1, Q2 next year. She's coming out and spending 225, 250 at a very minimum. That's going to make everybody realize Amazon and Alphabet cannot take their foot off the gas. They have to come out over the top in January when they report their 2026 earnings. The chip game, my opinion, is going to ride higher in August. So we'll see.
Okay.
I think I'm going to be correct. Wait,
I hope so, man.
Microsoft's in 14 days. So is it Alphabet that's reporting next week? Am I getting my companies wrong? Which I very well may. Microsoft, when are they reporting? They're reporting
Jeez. Just look at SAS, bro.
29, you're right. It's Alphabet. My bad, everybody.
SAS is just on a tear with these recoveries, and these midday recoveries on all the SAS names is just like you cannot do this. Look at this.
No, look at this. Salesforce booming.
Yep.
ServiceNow, where are we at? Recovering.
Yep. Literally recovering off of a 5%. Like literally, they're gonna get a 5% close. Like literally 5% down, and then they closed up. And then look at Adobe and Intuit.
Yeah.
Look at Intuit now. Like, crazy. Dude,
What's
SAS
the
is
ticker?
back, man.
INTU.
INTU, yeah.
Yeah.
There you go.
I mean, look, the reality of the situation is these things got too cheap for no reason.
Mm-hmm.
When I know this, and if we really look at the numbers, okay, the reality of the situation is that when you are in a situation where everything is going wrong on the stock price, but earnings are still increasing, I mean, I'm sorry, but this is what people were selling off. When you look at Salesforce and you look at them on an annual basis, you're looking at a company that has never declined revenue ever in their history on a year-over-year basis, and it's up and to the right. Yet people wanted to sell it off. You add ServiceNow in, pretty sure it's the same thing. It is the same thing. I mean, These are great companies that just got too cheap for the wrong narrative. So we'll see.
Yeah. Moody's, S&P Global. No, SAS is on its way to recovery, man. Like I don't doubt it. I think we just have to be patient, let them do their thing. Like Guidewire software is up. I gotta add Autodesk to my list. Autodesk. There you go.
Yeah, I'm excited about where we go with the rest of the year.
I think SAS will recover nicely throughout the rest of this year. You're looking at probably getting back to, like, depends on which company you're talking about, but I think that the multiple re-rating on SAS is happening. Like literally, if you just look at Intuit in the last 5 days is up. Like this month, Intuit started at 250 and now it's almost at 300. So what is that, like 15% in less than 2 weeks? Yeah.
Yeah, I mean, look, the we're in the thick of earnings season. Big Bang's crushed it. Big Tech is going to crush it. The question is, does anybody care? Nobody cared about Taiwan Semi. Taiwan Semi should have saved the entire trade. For some reason, it didn't. So we got to see. At what point do they get too cheap? I think they're too cheap now, but I thought they've been too cheap all year. We'll see.
Yeah. Yeah. I think if I had to pick among the companies that could do really well, it's probably Adobe, man. Adobe might have definitely bottomed. Their bottom was probably 194, that. And I think they could probably get back to like the 300s sooner than people think. Only because their earnings are so strong. Sorry.
When you were in New York, did you ever listen to The Fan?
The Fan?
Mike and the Mad Dog sports podcast?
No, I was more of Z100 in the morning with what's his name? Elvis Duran.
Dude, to give you an idea of how crazy Fanatics Fest is, look at this. They built out a whole radio booth for The Fan.
That's awesome.
I cannot wait to go to Fanatics Fest in a couple of days. Cannot wait to go.
Yeah. Are you looking at any SaaS names?
No.
Other than the ones that we spoke about?
No.
Or are you just going to stay long on the AI trade?
I'm staying long on the AI trade. I'm staying long on Salesforce. Because I think Salesforce will equate to the AI trade. I think people are sleeping on Agent Force. I think people are sleeping on the backstop of buying back shares. And I think that this company will get people to change its mind. And I'm buying CoreWeave. I still believe we need a lot more compute.
I have the same feeling when it comes to ServiceNow. Like I use the product. I know what they're going for. I also know some of their newer products, like their newer acquisitions, what that means for them and what the value is going to be. And yeah, I think that, what's going to probably blow a lot of people away, their RPO numbers on their usage-based offerings. I think that's probably going to blow a lot of people away. So I think this whole like AI disruption narrative, just like you said with with Salesforce, which is Agent Force, I think that's going to be a big mover. But it's going to take a year to play out,
100%. It's going to take some time to play out.
Yeah.
But it doesn't mean that it's not going to play out in a good way. That's the biggest thing.
Look into Charter. I'd love for you to take a deep dive in them. I feel like they're so bombed out right now that like any news that they're partnering with Starlink could send them rocketing, just like it happened the other day. And I feel like initially there was a rumor that they're talking, right? But then it kind of like died down. But it's like the same thing that happened to PayPal. Remember PayPal, people said that, they were talking and then it kind of died down. And then now all of a sudden we hear that there's actually a formal offer and it's like the stock is up higher. I'm thinking that there's, what they say, like buy the rumor, sell the news, kind of like that happening right now.
So Charter's $18 billion company.
Which makes no sense.
Spinning out. No, they're not spinning out. There was Comcast is spitting out something. All right, so $54 billion revenue. Yeah, we looked at this. Didn't I say I liked it?
Yeah. What's crazy is I don't think that people have realized that
The problem is the debt. People are worried about the debt, but how much EBITDA do they have? They do 22 billion in EBITDA, so I'm not worried about the debt. I mean, interest expenses at 5 billion. That's where people are angry on this. But
you want to know something really cool? They signed a deal to merge with Liberty and to merge with Cox. And the only thing that they're waiting on right now is approval from California, which should be done by this summer. And once they do that, the deal terms are that Charter would throw about 30 million shares. But this is when like Charter was trading at a much higher stock price for the acquisition. So they're getting like this crazy premium for Cox, and Cox doesn't have nearly the amount of debt. So you ever like bought something and your net leverage went down? Like I've never seen that. So it's like crazy to see that happening right now with Charter.
so you talk about this is the cheapest company I've ever seen.
Yeah.
I've never seen a company trade at 3 times earnings. Never.
Yeah.
I've never seen that before in my life.
That's what I'm saying. Like in 3 years, basically you're buying back the whole company, but that's because your enterprise value is including that 90 billion in debt. But the thing is, I did a debt analysis, and the thing is, like the debt is very well staggered, so they're gonna have plenty of free cash flow to buy back shares. So that's what I'm saying. Like if they keep buying back shares at this depressed price, you're looking at an EPS growth that's like 50% per year of EPS growth.
It's crazy.
Just based on buybacks. Yeah, it's a very interesting thing that's happening. So
yeah, I don't know. That's really nuts. I mean, that is so cheap on a EPS level. The problem becomes, once again, people are worried about that debt stack. And look, if I was Elon, maybe Charter's what I fucking buy.
Yeah, you get 50 million active customers, and then at the same time, you've got like a billing platform that they already have. They've got they have 9 million mobile subscribers right now. Like that's instant right there. And then on top of it, you got this massive free cash flow pile that's going to be coming in. You know, SpaceX doesn't have a lot of leverage, so you could take on the 100 billion in leverage without too many issues. I mean, you got a legacy cable business that you basically use for everyone who's urban, and then you've got a fiber ops business that you integrate, and then rural. Basically, Charter would stop doing any rural builds, and then I don't know if it would get through regulatory. That's the only issue.
Yeah, I got to address something. ASTS is falling. It is at 53.97. Everybody, look, I don't want to see anybody lose money, but when you're playing with high beta names like this, you got to be ready to accept the downside with the upside. Over the past year, there have been many opportunities to get out of this name. And you lived through this once before when it got above 120 and fell into the 60s, and then it rallied again going into the SpaceX IPO. If you did not get out, I don't know what to tell you. The numbers for ASTS do not make sense. And I don't have a crystal ball. Maybe it goes up, maybe it goes down. But this has given you opportunities to get out. And if you're not looking at the fundamentals and you're just looking at a chart, I don't know what to tell you. This never made sense from a fundamental standpoint.
Are you a buyer of Rocket Lab?
No.
At what price would you buy it?
$20.
$20.
Yeah.
Jesus.
What do you mean, Jesus? You really want me to go down? Now I'm going to go down the rabbit hole.
You don't think $20 is a little bit too little now, especially because they had just acquired Iridium? Like how much did they pay for Iridium?
I have no idea.
Let me see, RKLB. Because now they actually have some EBITDA that's going to be coming in. So
Sure,
$54 Iridium share.
I'd rather buy more SoFi.
Rocket Lab secured a $3.6 billion bridge loan from Deutsche. What was it? I think they mostly financed it with shares. The enterprise value of Iridium to $8 billion. So they bought $8 billion. And what's the market cap of Rocket Lab right now?
So I'm not sure what the
40 billion. So
I don't know what the new prorated numbers are. That's the problem. But still, I don't think Rocket Lab is worth it for me. The reality is, as a standalone company, before you factor in everything, it did $650 million of revenue with an 80 billion market cap at one point. That doesn't make sense to me. The growth rate's not there. The numbers aren't there.
I think you're wrong. There was $100 billion market cap at 150
$100 billion market cap, right? And if I show you, this is something that really aggravates me, because I know, oh, Steve, you shouldn't look at companies in different industries. Yeah, you absolutely can, because they both do fucking revenue. And when you look at revenue with SoFi in a year, on a year-over-year basis, okay, and then you put in Rocket Lab here, Rocket Lab was 4 to 5 times larger market cap than SoFi, maybe even bigger disparity. That's insane. You want to look at profitability between the two? Let's get revenue out of there and let's just throw EBITDA on there. SoFi's EBITDA went positive and they did 760 million in 2025. Rocket Lab, once again, a much larger company not doing any EBITDA. So why would I want to buy Rocket Lab over SoFi when I truly believe SoFi is going to continue to compound earnings at 30 to 40% for the next 5 years?
I think it's unfair to compare SoFi like directly to it as a business, but maybe in terms of like
just numbers that you're looking straight for. Numbers. Yeah. Not a business, straight numbers. I think SoFi's got a bigger TAM. They have an easier way to get there, and they can compound earnings growth quicker. Like I just
don't like that they don't have any guidance on when they're actually going to start making any money, and most of the time they're just basically going to be burning cash. Like that's why I said to Matt, I was like, "This is
you know my investing style. I don't take that type of risk anymore. I really don't." Yeah. And I'm happy that everybody made money on it and everybody's still up. I'm not saying it's not going to do well. I'm saying it's not for me. And just because it's not for me doesn't mean that it's not for other people. But I care more about quality fundamentals. Sorry, Rocket Lab doesn't have quality fundamentals. Is it a cool story? Yes. Are they doing something that a handful of companies can do and you can't compete with? Yes. But does that translate to real profit? I couldn't tell you. Nor do I want to go up against SpaceX as a competitor.
Yeah. For me, I think they have profitability probably in like 2035, maybe. That's when they'll see real profitability, I think. Like if they actually launch their constellation and do all that stuff. I mean, they're probably going to get something out of the whole Iridium deal, which is probably going to help them. I mean, that was not a bad move on their part to raise capital.
It was a great move.
To raise $3 billion when the stock was trading at such a high price, that was smart. Like you could not have done a better job than that. Like
100%.
What price did they? That just goes to show like their CFO, whoever it is, deserves a raise.
You dilute when the share price is high, and you make acquisitions when the share price is high because it cost you less. They did the right move there.
Yeah, in May, they did a $3 billion at-the-money offering. And then same thing, complete another 1.1. So they're stacked with cash, which is good because they don't look like they're going to be needing – I mean, they're not going to be making any money anytime soon. So they need that money to basically live.
And look, if we go into a higher rate environment, this thing's not going to do well.
Yeah, when you compare that to the stupidity of ASTS issued those shares at a much, much lower price.
Look, these names they're just not for me. That's all there is to it. They're just not for me.
Yeah.
But it is what it is. They're for somebody else, and that's fine.
Are you a believer in the halo effect, where it's almost like the SpaceX IPO was like halo for all of these other companies, and now that that's gone, like this thing has actually come down?
Maybe. I mean, there could have been a lot of people piling into this because of SpaceX as an indirect proxy. I completely believe that, thinking that this was going to go up. The question is, are you good enough to play that game and get out? I know that I'm not.
Yeah.
I do not, and I'm very clear about this. I do not have a track record of doing it because I don't do it, because I know that it is not a strong suit. And that doesn't mean that other people can't. A lot of other people can, but I know it's not a strong suit. So why am I going to play that game? I'm very good at being able to stomach volatility and watch something not work and outweight the market and go on fundamentals, because eventually, if earnings are compounding, it should theoretically go up at some point. And I can legitimately wait 5 or 10 years and legitimately say, I don't care, and sit here with an iron stomach. I mean, I've done it with Meta since 2011. I've been through thick and thin with that company. I've never sold it. So rode it from 400 to 80 and back up. So I can legitimately show the track record and say, I don't care. And those are the investments I look to make. So
Freaking Nebius. God
and look,
damn.
people can say, Boomer, I invested in Palantir off the jump. I still have shares. I invested in SoFi. I invested in Zeta. A lot of people aren't investing in those companies.
Just all that matters is, are you up? Are you making money? Yes. Okay, cool. That's it.
And
Everything
here's
else.
the thing. Could I have made a lot more money? Absolutely. Same with everybody else. But you know what? I'm very comfortable with how I invest.
Damn it, man. The entire market is like taking a bigger dip now. ASTS is down almost 20% now.
Yeah. Well, look, there's a lot of money that are probably getting hit with stop losses and algorithms at this point, in my opinion.
You think that there's that many people that were leveraged on these things?
Yes. Oh, yeah. If you're going to leverage, you're not leveraging on Microsoft. Like, who the hell is leveraging on Microsoft? You know what I mean?
Yeah. No, but like, I think Tanner said it. Like, was it you? Like, that people were like leveraging Nebius?
Oh, I said that I wouldn't be surprised if people were leveraging Nebius. That's what I said.
I don't know. I didn't see anyone mention like that they were like that long on Nebius that they would like buy a bunch of, leverage it that hard.
When it's going that high up and that hard up, I mean, you got to think people are going option crazy and going leverage. I mean, stocks don't run like that without additional firepower. Like, really think about how hard that ran.
Yeah. I just thought because it was a much smaller in terms of market cap, and like every day the new deals would keep getting announced. So, there was an active buyer pool, and the market cap was, the market cap on Nebius is $43 billion. Not exactly like the craziest amount of, like it's not crazy.
And what's the market cap on CoreWeave?
CoreWeave, 39 billion.
Okay.
So
now I'm going to show you something.
Okay.
And once again, this is why I am going very long CoreWeave right now. So if we look at Nebius, and we'll do Nebius on a TTM. Okay, TTM revenue. Maybe Nebius isn't the right one because they did the whole conversion bullshit and all that stuff. So we'll just do it quarterly.
Jeez, they really are. They're going to go out of business, man, based on that chart.
They converted the bit. Remember, they were.
I know. Yeah, I know.
But if we layer in CoreWeave, okay. I mean, let's do let's do annual. So annual, not TTM. And we throw CoreWeave in there. Like, I don't know. I'd rather be in CoreWeave. Like, it's a smaller company that's here's the thing with CoreWeave. When you really look at this company, it is the debt there. Absolutely. Absolutely it is. But, sorry, let's do quarterly. Look at that revenue. That's an S-curve in revenue. They're now doing 2.1 billion in a single quarter with a 99 billion backlog RPO book. And the growth quarter over quarter is the biggest growth they've ever seen. And then if I layer in EBITDA, here's the big thing. They just did $1 billion for the first time in 3 months on EBITDA. It is scaling with their revenue. They're on a 4 billion run rate without any increases. This is a company that can take care of the debt, good balance sheet, and the demand is there for their product, and it's probably only going to scale. So when I look at this, I don't want to be, I am a Nebius shareholder, but I don't want to be buying more. I'm buying more CoreWeave because you know what? I think people are wrong on it. And I like to take the other side when I think people are wrong because I see a lot of value 2 years out. Because I'm willing to sit here for listen, if CoreWeave goes to 40, I'm buying more. Unless something changes in the data where I have to sit there and say, okay, I was wrong, I'm exiting. I'll just scale into it on the way down.
I mean, I've been seeing a lot of bears talk about like the neo clouds will get crushed and then eventually they would get bought up.
But how many bears were there on SoFi? How many bears were there on Palantir? I mean,
true.
I bought SoFi all the way down to $5 a share and didn't care. And I've been in that trade since 2021. So yeah. I have all the time in the world.
Okay, brother. Well, I'll let you go.
Go get some sleep. Go get some sleep.
Yep. Have a good one.
Later. All right, everybody. I think the moral of the story right now is you can't get upset with would've, should've, could've. Can't do it. It's not healthy. You got to make smart investments for yourself, and you got to know your own risk tolerance. Okay? And I think a lot of things that Chris says is very important. And look, right now, there's a lot of companies getting smoked. And there's no crying in the casino. There is absolutely no crying in the casino. Does this hurt? Yeah, some people it's hurting. But you know what? The market is still at all-time highs. And and I was wrong. It's Alphabet next week, not Microsoft. I thought it was Microsoft. You have a lot of companies starting to report next week. Yeah, the big banks do well. I'm looking at today as a day to buy more CoreWeave. I bought more CoreWeave. I'm not done buying, and I'm willing to wait it out. So we'll see. But there's also companies that are doing well. I mean, NVIDIA at 207, you're still up a lot of money. SoFi at 1750 is not horrible. Meta at 670, it's coming back. So this isn't something that I think is going to last. I think the hyperscaler is going to put up great earnings, and I think the hyperscalers are going to start to get the market to turn. Now, there is something I want to watch with everybody. Did not get a chance because Chris was here, and this is why I wore a red shirt, because my blood may boil. Let's see what these captains of industry have to say. That's going to probably piss me off.
Biden Treasury official Natasha Sarin. She's a Yale Law School professor, president, and co-founder of the Budget Lab. Also, former Trump Treasury official Joe Livornia, and he is CNBC's chief economist. What do you think about all this?
So I think where we are this week is we got an inflation read that was lower than expectations, but still pretty high. We're in the mid threes. We have consumer retail sales holding up pretty well. We have jobless claims indicating what the jobs numbers have been indicating for the last few months, which is the labor market is doing pretty well. And so I think where we're looking at a picture that is starting to form of an economy where inflation is really a core issue. And remember, all of these are backward-looking indicators, except for what Rick was saying towards the end on business indicators. And that means that we're not actually capturing a bunch of what is happening with respect to the conflict in Iran, where I suspect upward pressure on oil prices and gas prices is going to continue in the next few weeks.
Joe, you agree with that?
I do. I mean, the economy is booming, but there is certainly inflation pressure. Today's or this week's data was obviously excellent, as Natasha mentioned. However, given the fact we're going to have double digit, if not in the mid to high teens for CapEx and GDP, the retail sales are strong. The labor market shows no signs of weakening now. It actually appears to be firming. Claims are super low. You've got monetary policy that's very easy, and inflation will not go back to target without some help from the Fed. Last year, Andrew, we got 75 basis points in easing from the Fed because there was concern about the labor market. Those concerns now are misplaced, and the inflation outlook is more uncertain. It's more fraught now than it was 6-7 months ago when the Fed was easing or contemplating further easing. So yes, the economy is good, but it's going to need some help from the Fed to kind of slow things down.
So, Joe, are you of the view the Fed is, and the new Kevin Warsh Fed is going to raise interest rates, lower interest rates? We talked to Judy Shelton. She thinks you don't even have to touch the interest rates, that there's sort of other tools with which he can use.
Well, like I like Judy. I mean, but the fact is that monetary policy is a very blunt instrument, and the Fed funds rate is the primary tool to do so. The Fed is not going to be shrinking its balance sheet by selling assets, so it just leaves them the Fed funds rate. And it's clear with this AI boom that the neutral or real rate is higher. That jives with Kevin's view that the productivity story is going to be positive and play out. But if you're worried about inflation, and as Natasha said, it's been consistently elevated. The core rates are still well above 2%. You look historically and say, okay, when in the past has inflation, when you're at trend or better trend growth, has inflation ever gone back to where you want it just magically? Chris Waller made the same point in his speech this week. So the Fed, in my view, has to hike. Kevin will hike, and it will be this year.
What do you say?
I so agree with Joe, and I actually think another person who agrees with Joe is Kevin Warsh. You heard him in testimony yesterday saying that, you know, we shouldn't make anything too much of any one particular data print that's showing inflation below expectations.
That struck me too.
Inflation is like my focus, and it is important for us to, and the Fed will do everything in its power in order to be able to effectuate on the price stability side of the mandate. So he actually was sounding like Kevin Warsh of old with respect to his focus on inflation.
I'm not going to hang it. Like, if I need to raise, I'm raising, and I'm not, you know. It's going to be here after.
Because I think Judy thought that you don't have to touch the rate. Also, by the way,
Judy always thinks that you know, that's her whole thing is about supply.
But I was going to say, Gary Cohn was on our air on CNBC, I would say in the last 24, 48 hours, and made a similar point about maybe not having to touch the rate itself, but having these other tools. I don't know if you think that's even plausible.
I think that, the Fed has other tools, but as Joe's talking about, the main tool that they have to effectuate interest rates in the economy is the Fed funds rate. And those other tools are both untested, but also untested on the horizon that you're wanting to see rates come down. And remember, we haven't been anywhere close to the 2% inflation target, essentially since the post-pandemic period. So the Fed has had a lot of work to do, work that's been exacerbated by the choices that the administration has made that have been inflationary, like the tariffs. And I think it's sort of difficult to make the case that we're not in an environment where the question is, when will the Fed hike, will the Fed hike?
And Joe, the old Fed, what is the main criticism from the same people now that are resistant to raise rates? The criticism was that they waited too long, and they're never going to get out from underneath that. The Powell Fed for what happened, and I guarantee you, Warsh doesn't want to. He was probably one of the people. He was one of the people that it was very clear that they should have done something earlier. So he's not going to be in a position where he makes the same mistake.
Right.
No, of course not. I mean, look, Kevin was a Fed governor from 2006 to 2011. He's been kind of an institutionalist. I don't mean that in a bad way, but kind of traditional institutionalist in his approach. And that's not going to change now that he's got the job. I mean, yes, if you have a productivity boom and you see unit labor costs plunge and inflation pressures moderate, absolutely, then he could hold things and wait. And I think the board will allow him to wait a meeting or two if he believes the inflation outlook, for whatever reason, is going to meaningfully improve. But beyond hiking the Fed funds rate, I mean, Joe, can you imagine if the Fed was going to try to sell some of its $2.5 trillion in mortgages? I mean, how disruptive that would be to markets and where long rates would go. If the Kevin Warsh-led Fed, which I believe will be a very good Fed, raises rates, you actually in the short term, you actually may get long rates to actually fall, and that may actually President Trump may like that, because those are the rates that matter most, are those long rates.
We've seen some. I've been mentioning that, and people have mentioned it to me that sometimes when it seems like rates are headed higher, the long end. Sometimes when it seems like they're not going to raise, that the long end rates go higher. When it seems like they're not going to. You would think that if you're going to cut rates, that rates would come down, and the opposite.
Well, your break-even rate.
You get opposite effect on the long end. It's like, oh, they don't have the nerve to do what's necessary.
If the Fed hikes and if the inflation risk premium collapses, you'll see lower break-evens and interest rates will drop.
Down. Yeah.
Okay. I don't think they're hiking. And I think that this is absolutely crazy. Oh, and then Michelle is showing off. She just texted me that she's about to have spaghetti in Italy. You know, Michelle and Ray are living their best lives. Now, I think what not everybody, but I think what a lot of these people are missing is that raising rates is not going to have the effect that they think it's going to have. This is an energy-driven inflation spike that's already rolling over. Raising rates is not going to cool anything. It's not going to cool anything. These people have lost their minds. Now, some of you are interested in what Levitt is saying. I'm not sure what she's briefing the media on. If it's not anything pertaining to the market, I am going to shut it off, but let's see what she's saying.
Known for killing women and children and innocent people in their country for a very long time. So you should focus on that in your reporting. Daniel.
Thanks, Caroline. Welcome back. Another World Cup question, much as it pains me. President Trump had some harsh words for Spain at the NATO summit last week.
Don't care at all. I'm not entertaining what they are talking about. This is going to be an overall. We'll sit here and try to wait for one or two questions that's going to pertain to what we are looking at. Trump is speaking tonight. We'll probably get more out of that, and we're just watching the oil markets. So we'll go with that. Now, keep in mind, the problem with the Fed is it's a majority vote. We could see a hike. I'm not going to sit here and say we can. I don't think that they should. I don't think that we should hike. And it does look like inflation's rolling over. So that's where I'm at on that. So let's get to Taiwan. So I'm going to close out with Taiwan Semi and really go through my thesis. They guided for $45.8 billion in revenue, up 12% sequentially in Q3, 37% year-over-year growth. They are doing so much with expansion, and agentic AI is something that they're focusing on. And they're saying what is driving their resurgence is CPUs in AI data centers on top of the accelerators. The demand duration, okay? This is a quote, okay? This is a quote from their conference call from this morning. Taiwan Semi sees strong demand all the way out to 2029 or 2030 and called AI a new industry that will touch autos, humanoid robots, and everything else. Think about that for a minute. And what could be the best quote? You put all the truths together, it's not the truth. Every CEO is aggressive. So Taiwan Semi makes its own judgment and is literally checking AI data center construction locations and rack installs to make sure its chips don't pile up in inventory. That is where we are at. And they said they're jealous of memory makers with their 86% gross margins. They said capacity is so tight for packaging that they welcome Intel's EMIB gaining traction as extra flexibility. The roadmap, check. A14 is on track with pre-production. I mean, I don't see anything in the data. I'm a data-driven person. I do not look at what ifs. The data is driving me to believe that this is many years going forward. And you know what? On days like today, I'm happy to buy because I think we need that much more compute and there will be that much more demand. Maybe it's priced in, maybe it's not. I don't know. What I do know is Michelle is absolutely, oh my God, no, she didn't. Can I show this? All right, her phone number is not being showed. This is what Michelle is sitting out there showing me, everybody. How beautiful that is. How beautiful. Good for Michelle and Ray. I'm so happy for them. I just showed the stream. I am jealous. Looks delicious. Looks delicious. So let's end it out with this, everybody. I think red days are healthy for the market. I am excited about continuing to invest. Taiwan Semi reconfirmed all the data that we've gotten, in my opinion. And right now, I believe CapEx will continue and the AI revolution is in a healthy place. I'm looking at this as an opportunity to buy. We'll see what happens. It can go lower, but I'll be back later. Thank you very much. And, happy investing. Happy investing. Do me a favor. If you are enjoying the content, please subscribe to the channel. It helps me out a great deal. Please subscribe to the channel. Thank you very much. Hopefully everybody has a great lunch, get some coffee, and don't worry about one red day. We'll be back either tonight or tomorrow morning. Thank you, everybody. Have a great afternoon. Oh, and if you're going to go watch Tanner, spam him with a bunch of Z's. Thank you very much. Addicted to Trading. Thank you for hanging in there. Addicted to Trading, real quick. Check your X messages. Thank you.